Good morning, everybody. It's Chris here from Serene with the 4 majors analysis update for the 20th of March 2012. We're going over the 4 majors, starting with the euro against US dollar. Let's have a look. Okay. So, what happened yesterday? Upside movement yesterday after the continuation from Friday's range. And things are moving quite steadily now to potentially 13,300 as it stands. The CTC today, trading wise, very small range, a lot of indecision over the Asian session going into the European session this morning. 13,300 possible target today, quite close, so we could see a bit of consolidation. However, as it stands now, still heading to those highs after that bounce just recently. So what we want to see is the momentum continuing to the upside. And if you look at the intraday charts, 4-hour chart, you can quite clearly see that price is now trading above the institution moving average, which is great. As long as it maintains these levels, then we should be looking for upside movement to continue. Ideally, our ultimate target would be the highs over here, just below 13,500. What's that, 13,4900-ish. And the next target or potential support resistance is just above us. Mentioned 13,300. Slight consolidation around that area is expected, as we've had a prior resistance and support in this area before. There we go. If I just zoom out, you can quite clearly see a significant support and resistance level. So, what do we have in our favor? Well, we have all the moving averages below price, and our CTC on this time frame is below price as we speak. Higher swings dictating upside movement. So, all we should be looking for is potential highs to all we're looking for price to maintain these levels. So, uptrend intraday is favoring, is up. Okay, so as long as this trend line stays, if price stays on this side of the trend, then fantastic. So ideally we're having a pullback as we speak from the low of the start of this upside trend yesterday. If you take the low and you project a quick high, you can see that we've had a pullback over the Asian session. Now you can see that 23.6 is price just trading on the underside of 23.6. 38.2 here at 13,200, and the 50% mark just below the institution. So institution sandwiched between the 38 and 50. As long as it can stay above the 38 in particular, then all we can see is a bit of a consolidation before we see an upside move for the remainder of today. So you see the previous up move here. You can see that price pulled back to 23, did make it to the 38, and then we saw it bounce higher, maintained above the 20 and 50 period moving average, and we saw that bounce to the upside. I think we've had a full extension. We aren't too far from 100%, which is taking us back to 1328.29 mark, which happens to be our next resistance level above us. So everything's looking good for further upside movement. If you look at the past 16 hours of trading, yes, we've had some downside wick, very indecisive. There's more buying sentiment in this. So look for bullish engulfing on an hourly or something like that, just to confirm that upside movement is looking for further bounce, and then head for those areas of 1329. For this morning. Hourly charts, let's have a look and see what's happening. RSI is above the 50 down, so trend is bullish. 20, 50 and 200 all in line, nice openness, and you can see nice bounces to the upside. You can quite clearly see that prior resistance here at roughly the 1328, 1329 mark, so be aware of that. Ideally price needs to be trading above that in order to see further extensions to the upside. Noticeable support and resistance level. And once that's confirmed, then we should be looking at least up here to 1349, 4800 for the remainder of this week. Okay, so we have everything in our favor. So we have downswing on our daily being breached. If you look at it on our daily, we come from highs, lower swing, and that trend line now has been breached. Okay, this upside bullish move here, breaking this trend, bullish engulfing, and we're now heading up towards our first trend. All we need now to see is a pullback, a swing forming, and then we have a potential new swing starting. In this consolidative range here on the euro US dollar, you can quite clearly see we've just been moving sideways, bouncing between 2 points, up, down, up, down, up, down, up, down, up, down. Quite giddy at the moment, but nonetheless, between 2 points, consolidating. We could get a 13,300 and price could fall back over again. We've been there before. We've had a failure before, so it's not to say it's not going to happen again. So we've got to be aware of that. So our daily break and close above 13,300 would definitely signal that we should be looking for upside positiveness for the remainder of this month, and we should be heading for those areas for the as foreseeable targets. Next up is sterling against US dollar. Good old cable. Let's have a look and see what's happening. Weekly bullish engulfing last week. So where to for this pair? Well, one thing that really worries me is this 15,900 mark, which bode a real hassle on our daily. You can see here on the weekly we've pretty much gone sideways for almost a full 2 months now, and that 50 period and the institution moving average still above price as we speak. CTC on our time frame is still looking bullish. However, we need to get above all this before we even see a clear, definite bullish signals for further upside progression. On the daily, however, you can see quite clearly that we've punched above the institution moving average, which is a good sign. So we had an attempt before. It didn't stack up when we saw price reverting to the downside. 5,900, as I mentioned on the weekly. Just want to put this in so you guys can see it. This is a very strong support and resistance level psychologically for this pair. You can quite clearly see we've had a lot of hesitation along this line in the past. Support, further support, a lot of resistance just recently. So CTC getting our blue across the board, which is great. Moving averages all below price. So we have two things in our favor. 3 with all the moving average below price, CTC in our favor, and trading up above the institution moving average. My only concern is the 5,900. We have to get above that clearly. Before we had a lot of upside movement and we got faked out. That 1,500 was breached, don't get me wrong, but we do need to see price actually finding support here now, and we could see consolidation as we try and break above this. So if price can actually stay above if anything, 1585, between 158500 and the 5900, and then we get a bounce higher, then fantastic. It's got to close. I think if we see by the end of this week price still trading above 5900 or above the institution to start with, and then 5900, then we should look for potential upside for the foreseeable or for the remainder of the month. However, if we fail here yet again and we see bearish engulfing here, then we get below the institution again, then we could see potentially shorting opportunities arising, and then we should be looking ultimately back down to 1700 as our first potential call. We've been there before. Not to say we can't be there. We can't or will not try that again in the future. We had a clear resistance here before, and we went down to 15700. So yeah, you've got to let the market dictate. In this case, patience is a virtue. You've got to wait for very patiently for a clear break over 5,900. Psychologically, that will definitely tell us that we should be looking. The floodgates for buying sentiment will potentially start. However, if we fell here and we get below and we close lower than 15,8500 and back below the institution moving average, then it could potentially show us we could be looking at bearish sentiment creeping in, and ultimately long term at 15,700 is our next target. For our charts, back above the institution moving average is a good sign. Trading above all the moving averages and heading higher. CTC is blue in our favor. Everything's fantastic. My only concern, as I mentioned on the daily, is this 5,900. We've had price testing it just recently over the past couple of days. We do need to see a breach of this area. Very important. I did mention 15,500. If price can actually stay above this area, then we could potentially add another reattempt of 5,900. A failure to do so, we could see price pulling back anywhere to potential targets to the downside, but as long as it remains on the upper end of this bandwidth, then we should be looking for a number of attempts at 5,900. We do need to see a break of that. Fail to see a break of that, we'll just see confirmation of consolidation, with ultimately the more consolidation on this, the more likelihood of a potential fall to the downside. My hourly chart, RSI, is positive. Moving average is all above price bar the 20 period, which acting as hesitation. You can see the last number of hours, a lot of indecision candles, a lot of spinning tops and dojis. We do need to see a confirmation upside move, as I mentioned, 15,8500. That's got to maintain as a potential intraday support. The longer that happens, the more likely is we're going to see a bounce higher. Fail to see that and RSI gets below 50, and we break below the 50 period moving average here and the 1585, then psychologically we should be looking at a potentially further downside movement. And if we look at it, see the 23.6, 38.2 here at 15,800 would be our next target. 50% moving us back to the institution moving average, as our third target. So very, very important that 1585 comes to the rescue and acts as a support level. If you can hug the upside over here and get pushed higher with a 50 period moving average, then ultimately we should be looking at 5900 being re-attempted. Those highs, we do need to see a break of those highs. So here's at 5900 I mentioned on our hourly chart. Just plot all these very major support and resistance levels, so you know psychologically that's where prices. We do need to see a bullish engulfing above here. Okay, you can see as we went into yesterday, a lot of spinning tops, indecision, no bullish candles whatsoever, and price has now fallen since then. So a support at 1585 or here roughly bullish engulfing would definitely maintain that 5900 will be back on as a target intraday, but we need to see a break above that to definitely confirm further buying sentiment for the remainder of the week. US dollar Swiss franc. Let's have a look at the Swissy. What's been happening? Clear hesitation. If we look at the daily, we've had a tweezer top here just recently. This is after breaking above potential resistance. We really thought price was going to move forward, and then we came unstuck here at prior support and resistance at the 9300 mark. So CTC was everything up favor, and then we had potential buying opportunities at the high of this wick, with ultimately these highs right up here at 960 as a potential target. That failed to materialize. We had a bearish engulfing, and then price was reverted. Since then has reverted to the downside, breaking this little upside trend in doing so on Friday. The Monday's trading range trading lower and heading towards or into prior resistance or support here just above the 910 mark. So ideally we need to see 910 being breached now. Psychologically can get below 910, nice round figure. Then we're looking at for the prior low, which is here at 985 as a potential target long term. So we do need to see this breach. Moving averages 20 and 50 are closed below, and the CTC has gone red. However, we're blue on candles and we don't have a red candle arrow yet. The next potential call, if we get a break below 910, is definitely going to be 985. We've been there before, and as I mentioned, we do need to see a bearish engulfing, and the CTC needs to be to show the confirmation of that. So in our smaller time frames, the 4 hour, put the 910 in, make it nice and thick, so you know that psychologically 910 is a price strong support. If we've been there before, we do need to see a breach of that. As it stands at the moment now, you can see that trend direction is definitely negative. Institution moving average above price. In fact, all the moving averages on a 4 hour are above price, which is a negative signal. However, that 910 is in the way. Do need to see a bearish engulfing here. The sooner we get it, the break below that and close would definitely signal that we should be looking at the 8950 as a potential first target as we head lower. Let's have a look at the hourly just to confirm entry signal. Yeah, everything's below 50. Fantastic. Lower swings definitely driving the market lower. You can see lower swings, trend direction. There we go, 910, just below price as we speak. Price does need to close below that. A nice bearish engulfing would definitely signal further downside movement for the spare. All the moving averages above price, CTCs in our favor to the downside. So everything's looking good. The only thing we need now is a bearish engulfing. Nice little breakout, and then 985 down here would be our next target for this pair for the remainder of the week. Last pair of the day is the US dollar Japanese yen. Let's have a look at the daily. Well extended to the upside. Fantastic run to the upside. CTC is well extended. Moving averages are well evenly spaced out, confirming that bullish upside movement. 8400 is a very strong support and resistance level. You only have to look at the weekly chart. Let's have a look at that weekly. Okay, put in 8400 here. I'm just going to drop this horizontal line on here and just plot in 8400 so I can just show you. There we go. Price support and resistance on this time frame on the weekly. Just make it nice and big so you guys can see it. There we go. Prior hesitation along this for a number of months before, and we're trading straight into that. On the weekly, a lot of upside movement since the start of this trend back in early Feb, and on the daily you can quite clearly see as we've headed toward this 8400 long term, we've seen a lot of hesitation. Spinning tops here, doji yesterday, in particular on the daily time frame. And this morning, Asian market session trading slightly higher than the close. And as it maintains, we are in an upside trend. So as long as it maintains, we could see 8400 being reattempted quite soon. The move to the upside here, this previous swing high, yeah, from the bounce to the upside, you can quite clearly see that the 23.6 is acting as a nice support level intraday. So if you want to use that as a support intraday, 83, what's that, 10, 20, 30, so 83.30 intraday, just go to our 4 hour, put these levels in 83.30. There we go, that can be our intraday support, 83.30, there we go, and the 8400. So very small trading range. You can see quite clearly the prices has bounced along here. We saw a breakout yesterday, but that failed to materialize, and we saw price revert into the upside. Or otherwise, what you can do is just use your projection. There we go, same thing, same tool. You can quite clearly see. So 50 period moving average acting as a clear support area for this once the 20 is breached. So as it stands at the moment now, if US dollar is to strengthen against Japanese yen, we do need to see the 23.6 acting as a great support here. The longer it goes sideways, then we could see potentially price re-attempting those highs. 8400 does need to be breached though to see any further extensions higher. So I'm just going to put that in. We do need to see this very strong ceiling level being breached. If we don't, then we could see potentially price just consolidating here with the outlook to be quite bearish, and ultimately our first target, if that's the case, will be down here at 8200 as our prior breakout area. So you can see quite clearly, if I just put that in, you can see the range here. So very, very important that we maintain these highs. However, get a break of 8400 as very soon as possible. The longer we go sideways at 84, then the more likelihood is we're potentially going to see a bigger pullback. If that's the case, then we should be looking at 8200 as a potential first target. Second target here, the next previous consolidation range around here, the 8050 mark, and a break below that. You can see quite clearly we could be way down here below the institution moving average. That's it, guys. Hope you have a fantastic trading day. Please ensure that if you're using any of the strategies that we teach, that you follow them correctly. If you're not and you're interested, at the end of the webinar or this video, there are some details here to get hold of us. Other than that, have a fantastic trading day and keep it simple, guys. And I'll see you first thing tomorrow morning. Until then, trade serenely.